Well, good afternoon. Happy Friday, September 20th. Mark Milam here, your mortgage professional. Let's get right to it. So mortgage rates actually had a relatively good week, though it's a little bit of a disappointing week for everyone who thought that Fed funds rate cut of 0.5% would translate directly into mortgage rates. That's really not how it works. When the Fed cut the federal funds rate on Wednesday at 2 p.m. Eastern Time by 0.5%, they cut an overnight lending rate to banks and financial institutions. That's not a mortgage rate, certainly not one with a 30-year duration. And the good news here is that mortgages had been expecting this for a while, and traders who trade mortgage bonds in the bond market each and every business day had begun to price in or begun to trade at these levels. And that's why interest rates have been improving smartly since early July. In fact, we're down almost a full percentage point from where mortgage interest rates were in early July. So all of that improvement was pretty much baked in, and the Fed simply caught up to where mortgage rates already were. That being said, mortgage rates are still in really great shape, and there are further cuts on the horizon that, if you believe the Fed's dot plot. Let's take a quick look at mortgage-backed securities on the week. So these are the past 5 business days right here. Remember now that green days are good days, red days are bad days. This was actually the Fed rate cut day. This is Wednesday, September the 18th, and you can see the market sold off. We actually worsened on the day in which the Fed cut the Fed funds rate by 0.5 point. We got it right back the next day on Thursday, the 19th, and this is today, Friday, where we're slightly improved as well. But all things considered, we're kind of finishing out the week in a relatively flat trajectory. But hey, we'll take it. If you zoom out over the past 3 months, look at how much mortgage-backed securities have improved. All of that improvement is in today's mortgage rates, which is fantastic. And as we believe, if we're going to believe the Fed, we can think about November the 7th now and December the 18th, 2 more meetings before the year's end, where the Fed has given some indication that they are likely to cut the Fed funds rate even more. Let's take a look at their dot plot projections. So this is where the Fed will go out into the future and say, hey, here's what we think the Fed funds rate is going to be at a certain time. And this was the June meeting. So this wasn't this past week on Wednesday. This was taking you back to the June Fed meeting. And these are all the voting members. These little dots represent the voting members of the Fed. And you can see that basically what they were saying was, hey, by the end of 2024, we think we're going to be at 5.1% on the Fed funds rate, right? That's what they were saying. And then by the end of 2025, we think we'll be at 4.1, and the end of 2026, good Lord, who can predict that far out? But they were saying 3.1%. So here, let's fast forward to this past week's meeting. This is the September meeting. Now they're saying they think by the end of 2024, they'll be at 4.4%. By the end of 2025, they'll be at 3.4%. And by the end of 2026, they'll be at 2.9%. All this to say, listen, it's been how many months since June? It's been 3 months since June. And the Federal Reserve has revised their forecast for cutting by almost 0.5 point there. So this just goes to show you that all of the best projections in the world really don't mean much once you get 90 days down the road. Ultimately, what we anticipate will happen is that the Fed will continue cutting the Fed funds rate as we move through the balance of the year. And slowly but surely, we're going to continue to see mortgage interest rates decline. And that is good news for home buyers because we need some help on the affordability front. While inventory is improving, we're now at 4.2 months nationwide. A balanced market is 6 months of inventory. It's still not quite where we need it to be. But as the inventory picture comes back into balance and we see mortgage interest rates continue a slow trajectory down, we're going to see affordability improve. And that is excellent news for folks seeking to buy a home. If I can be of any service to you over the weekend, don't hesitate to reach out. Mark.Milam at highlandmtg.com. Thanks.